Good morning. Let me get my goodies up over here. Real quick. There we go. Looks like we are live. My chart shared. Good morning, Algo. Get my... All right. I think I got everything where I need it. How's it going today, boss? Mr. Algo Prime, how you doing? How long have you been trading, Algo Prime? With a name like Algo Prime, you must have been doing this for a little while, right? Let me know. Man, it's good. It's Thursday. I can't believe this week is flying by so fast. I was super busy yesterday, and the day just flew by. A few years. Okay, right on. Right on. I just had a coaching session yesterday with a gentleman that was doing some binary options trading. And that's something I don't know a whole lot about. I got to be honest. I mean, I've dug into the basic definitions of it before, binary options, but I think I even asked Grok or DeepSeek or something, hey, what's the pros and the cons of it? And it said that the idea is great, but that the math doesn't work out. So, yeah, pocket options. I don't know. I don't know all the different terminology and lingo. 10-second time frame. Wow, that's crazy. That's crazy. I mean, I'll go down to a 15-second time frame once in a while just to really drill down into a small zone, but that's not very often. 5 minutes is typically the lowest I go as far as an entry, but I will go to a 1 minute at times, 3 minute, 2 minute. Like I get down to those crazy time frames sometimes to really, really fine tune it, but yeah, you don't go down lower than 5. Got it. Yeah. It's just too much noise, right? So I would imagine binary options, pocket options, whatever that is, I would imagine that'd be just nothing but noise. Nothing but retail traders, right? Because you don't see a big bank down in those time frames. So it's literally noise. I mean, if something's being moved around by nothing but retail volume, is it really sustainable? I don't know. Maybe it is. Some people make it work. Kudos to them. But I don't know. Seems too unpredictable to me. That's why I like trading the higher time frames. Just because that's where the banks are playing. They leave footprints, right? They leave their shadow. So it's easy to kind of not easy. It's simpler to latch on to those types of plays. So yeah. Yeah, you don't like it. Yeah, I did. And when I looked up the definitions, the basics made sense, but then they started talking about the math of it, the winning percentages you have to maintain. I'm like, forget that. Because I mean, I average. You know what? I think I'm up to 50% overall average now on my wins and losses. My last month and a half, 2 months, has been a little over 65%. So I'm just on a roll, guys. But I've traditionally always been around 35, 40. But the cool thing about streaming and teaching and coaching, the cool thing is you yourself learn. So it really just kind of, reiterates and reemphasizes the principles you teach, and it shows in your own trading. So, I read it in a book once where somebody put that. They said, if you really want to master your craft, then teach your craft, because as you teach, you too shall learn. So it's a true statement, especially in trading. When you're forced to, you want to get good at trading, then go be visual to somebody and teach and coach and help. Whenever you get to that point, it's dramatically made my trading better. So it's really good stuff. ICT. Now I'll be honest, I don't know all the acronyms. Are you talking about like the liquidity hunts and sweeps and all that type of stuff? Yeah, I mean, I've heard ICT. You hear it's like a double-edged sword, and it's a hot topic, right? Especially in the trading community. There's a lot of people that talk highly about it. There's a lot of people that think that they're just out of their minds. Even higher up traders, right? You get a lot of them that praise it. You get a lot of them that trash it, think it's nonsense. So, my thing is, if you can make money with it, then it must be good. Think about it. Every single indicator we have in our indicators list, or any type of strategy you ever run across, it's only out in the public because somebody somewhere has made money with it. So, kudos to anybody that can make any trading system work. And, in a way, shame on the people that criticize those types of trading styles, because, well, if somebody's making money with it, then I wouldn't tell them to change anything. I mean, obviously refine and get as good at that craft as you can. But yeah, I mean, there's a liquidity sweep function in there, with ICT and all this, smart money concepts, right? Whatever acronym you want to use. But yeah, there's I think good and bad in all of it. But for me, it really just boils down to one common principle, and that's looking for unfilled orders. It's supply and demand. I mean, that's how markets move. Now, there's 1,000,001 different ways to trade supply and demand in different aspects. So, I'm not saying the way I trade is the only way to trade at all, but it's just what makes sense to me. Like the whole binary options, just as an example. A lot of things, even in the penny stock trading, I was trading at one point. I knew the principles, I learned the principles, but it just didn't quite jive with my perspective, my character. My character, this suits me perfect. Demand and supply, right? 4 hour daily, 1 hour. That's it. Stay with the trend, buy in the bottom of the curve, sell at the top of the curve, like just some basic principles like that. It just makes sense to me. I never was big on math, so that's why I didn't really necessarily get into all the options type stuff as well. It's funny. I had an algebra class in high school. I got a C-, and I was jumping for joy because I never did like math growing up. I always hated math classes. My sisters, on the other hand, were excellent at math, but they couldn't spell. They couldn't win any spelling bee against a second grader. But that's where I excel for whatever reason, is the language arts. So they can have the math. I'll stick with the language arts. I guess that's a thing, right? Most people, I've heard that before. A lot of people, you're either good at math or you're good at language, but sometimes not both. So that's definitely me. They can have the math, but I'll be happy to join a spelling bee here in Kansas City for whatever that's worth. So anyway, guys, I did close out my NASDAQ trade yesterday. I do believe that was yesterday, wasn't it? Was that yesterday or the day before? Go take a look. I think that was yesterday, right? This is just my demo account here. The 6th. Oh, I'm sorry. That was 2 days ago. So yeah, we already talked about that. Yeah, and I was even thinking about getting back into a NASDAQ trade. But I feel like at this point, speaking of curve analysis, I think it's a little high on the curve. You suck at both. Hey, as long as we know where we stand, that's all that matters. John Maxwell, he's an author, a book author, and I saw him in business conferences. He wrote a lot of really, really good books. And one thing I'll never forget that he wrote in one of the books, and I can't remember which one it is, Developing the Leader Within You, possibly. But he basically said, don't worry about what you're not the greatest at. Focus on what you are good at and maximize that. Because, so many people try to get good at everything. When the reality is, if you can get paid doing one thing really well, just hone that as much as you can. So where I lack the skill in the math department, I make up for it in, I guess you could say, geometry, because to me, geometry, for whatever reason, in math classes, just to put a bow on that, I always had A+ on it. And I think it's just because I'm a visual person. Well, when you're looking at geometry, what is a chart? especially if you're a fib trader. But the idea is I'm a visual person. You tell me something once or twice, it's almost always not going to stick right away. I have to see it and hear it a few times. That's just how I learn. Some people, you can tell them something one time and they've got it. Not me. I got to hear it or see it to really learn it, or at least hear it a handful of times. So, but yeah, I think that's a perfect parallel into trading. The technical analysis, the geometry, the shapes, the curves, the patterns. So anyway, what we got going on today? Let's take a look at the economic calendar real quick. Today is Thursday, so we've already had the Swiss National Bank come out with their, well, not Swiss National Bank, I'm sorry, the Swiss franc come out with their inflation reports, and it looks like they did nail that forecast. So that was the red folder event, high impact event for them. The previous reading was in the negative, or as far as minus 0.2%. This time it stayed the same. So yeah, not really any good or any bad. So we'll take a look at the Swiss franc today. We'll take a look and see if we got any pairs. Might even look on some small time frames, 5 minutes, 15 minutes, just to see if we can't, jump into a smaller term trade today with that. Other than that, the weekly unemployment claims comes out for the U.S. dollar at 7:30, and my chart is not showing, is it? My chart showing? Oh, it is showing. Let me refresh my other YouTube screen over here. Not showing. It's not showing, is it? Stop sharing. Sure. Okay, there we go. So yeah, unemployment claims, that's the other report we got coming out here in about 45 minutes. Looks like they are projecting a uptick back over the 200K level. So last week 199, today forecast 213. We'll definitely see how that turns out. And outside of those two reports, I don't really see anything on here that's going to affect greatly the currencies we trade. China, they do. So here's the thing. China's inflation reporting, okay, their numbers can sometimes have an effect on the Australian dollar, since they're one of the biggest, importer exporter pairs, if that makes sense. So I do like to look at the Chinese data for that reason from time to time. Now this is just a orange folder event, but still it's their inflation, right? China's inflation numbers. So sometimes it can have a bearing. But that's really about it. I'll count that as a half of a report coming out today. So really just the two. And I think that's about it. Yeah. Looking over to the top setups page for the day. Gold is still at the top of the list. Good morning, Alex. Good morning. Good morning. Gold, silver. So gold and silver are back on. I think it was silver that was off the list yesterday. So it's back on. So I definitely want to check those two out. We'll check all these out. I was looking at a demand zone on the Australian dollar yesterday, just to see if it might have a chance to come down. I haven't looked at that one yet, so we'll probably look at that one first. And naturally, the Kiwi dollar is right there with it. So those are the two bullish currency pairs I have at the moment. And as far as the bearish, we got a really strong reading on the Swiss yen. It's just a lot of choppy nonsense above it, where I'd be trying to find a supply zone. So we'll dig a little deeper into that as well. And then finally, the pound Aussie dollar. Again, the dollar rand, I don't trade it because I don't have it on my brokers. So yeah, we got two bearish currency pairs and two bullish currency pairs to look at, and then the two metals. Okay. China 50's on there, but again, I don't have that. So yeah, I'll go through these, but if you guys have anything you'd like me to bump to the top of the list, just let me know. Any trades you're in, anything you're considering trading, a win you had lately, a loss you had lately, hey, just let me know. Again, I'm trying to build this show around you guys, right? So I got plenty to say. One of my colleagues said that I've got the gift of gab, so I can run my mouth all day with no problem. But I like to also see what you guys are doing. So you're on gold as well. Let's just go straight to gold. So again, gold is giving us a very bullish score, fundamentally and sentiment, right? So let's go take a look at the chart over here. Make sure my chart's okay. Let me see here. Long at 44.08. Ah, yeah, okay. Yeah, I like it, man. I like it because you got obviously a 2-hour demand zone, which I think we looked at the last couple of days. Okay, that's where price is currently. I may be looking at this too. I got to be honest with you. Now, things I like about this zone and things I dislike. So let's start with the pros. Obviously, we had our 2-hour base right here, and then we had our leg out with some really good volume. Okay, trading activity down here, the VSA. Maybe I should make that a little bigger. Yeah, there we go. Okay, so really good candle on the exit candle. It bounced into a 1-hour supply, I think it was. Yeah, so we had this 1-hour supply over here at one time. You're on Oanda? Okay. I was thinking about Oanda at one point. So a colleague, a friend of mine, talks about Oanda quite a bit. So sounds like they're a really good company. But anyway, when price left this zone, guys, it bounced into this 1-hour supply, but just kind of chugged through and ended up breaking through it. So that shows that we got some pretty, decent strength when you're looking at one of my rules, which is did we break through an overhead zone, or did we break through a break of structure, right? So that's always one of my requirements, and we did that. Now, we did bounce into the next supply zone up here, which is the 4-hour. Okay, there's our 4-hour candle. And then we got to bounce from there. Okay, so that would be one of the cons, I would say, to this demand zone. Okay, is because it did hit that supply zone and then dropped. And this is understandable because this to me looked like a very strong supply zone at one time. 1-hour supply. 1-hour supply or demand? You said you went long, correct, Algo? I think you said long. Demand. Yeah, okay. So yeah, that's a slight disappointment, but it's really not too much of a disappointment because I would have expected that. Look at this supply zone back here. Okay, this thing formed. Now we can't use the green candle at the very origin of that strong move down because it's already been touched by that supply zone candle. See that wick? And that's why I changed the color to light red. It's just telling me it's already been hit. It's already been mitigated. But then, yeah, when you get to that supply zone, I mean, the bottom just dropped out of it. And it did even break this structure over here. Okay, it wicked through. So that's a really nice move. So that's definitely something to be aware of. Could this move bounce and then drive it all the way down? Oh, to the next highest supply demand zone. Had to turn off my heater because one second, guys, my monitor went out. I have a space heater under my desk since I'm right by my window. And every now and then I think it just gets to be too much. And so it'll just flip off the breaker. So that just tells me I have to turn off the heater. So anyway, okay, we're back on, it looks like. Okay, perfect. So yeah, guys, let's see, supply zone. Where was I at with this? Yeah, we broke the structure down here. So again, that's my only hesitation to getting into this trade at this time is because it did touch that what I see as a strong supply zone, right? Now, there's obviously the zone that we're in now. There's another zone down below, which is the one that formed from the Sunday open, the gap up. So that's ultimately my favorite one. Now, the volume wasn't as great down there. That's one of the minus ones, if you will, for this zone here. But the zone here, again, the volume was pretty decent. So I do like that. It means we had a lot of, this is where some institutional activity starts picking up, right? This the pre-market here in the U.S. Okay, so the end of London, the early part of New York. Okay, the pre-market timing. So that's where this trading activity was picking up, and then obviously the market open, the New York market open, and that market open on the 5th. Okay, on Monday. Again, it busted up pretty quick, but then it had to start chewing through that supply zone, and so you guys see it eventually did. So yeah. So now that we're in it, and now that you're in it, let's go down to some smaller time frames here and see if we have a pretty decent looking candle or two to look at as an entry. Well, that right there is a pretty good candle. So I imagine that's the candle you got in with that lovely wick right there. That's pretty nice. That's a pretty nice candle. I mean, that thing, you know, it's a red candle, but it's a bullish candle, right? Since it closed above the 50%, you know, level of it. So yeah, it's a pretty good bullish candle. You had some pretty good volume stick jumping in there as well. Another thing I like about this algo is you had a divergence on your RSI. Look at that. Okay. You got lower lows into the demand zone, but you also had higher lows on the relative strength index. So that's a pretty good sign too. I'm going to go ahead and hop in there with you because I kind of like that area, my friend. Yeah, I think the only thing I kind of disliked is the fact that it did bounce into that higher time frame supply zone, right? So let's just hop in there with you. So we'll see what this trade gives us. See if we can get a few bucks out of it. 2 hours. Just make sure everything looks the same over here. Now, see, that's kind of, so this is the funny thing. When you flip from trading view to, in my case, trade locker, okay, or whatever, obviously sometimes the candles are going to look different, right? So the zones look different. Let's go back over here real quick. Okay. You guys see clearly we got a candle right here with the push up, but the picture looks different over here, right? I don't know. I'm sure you guys know this. I'm sure you guys probably noticed this, but if not, you know, this is just one of the kind of nuisances of going from platform to platform is when you see the candles looking different. So that's the 2 hour. It doesn't give me a great picture. Let's see what the 1 hour looks like. Okay, the 1 hour is fine. So this would be my 1 hour demand, right? So I like it. I like it. I'm hopping in there with you. I'm going to hop in. Let's get a quick order put in here. We'll give it a little bit of a stop loss. I'll adjust to take profit at a later time. But as far as the stop loss, we're going to put it right about there. So we do have a wick over here. We are under the top of this former resistance point. Okay, so I would see that as potentially acting as a little bit of resistance. Okay, if price gets a little deeper as well. So this is a lot of the good stuff here, guys. Let me get this order in, and we'll talk a little deeper about it. I'm just going to do a 0.5%. Okay. Let's see here. Go back over here. Yeah, 0.5. Okay. We are in like Flynn. Here we go. Buy limit. Okay. Yeah. No, good stuff, man. Well, I do like the wick. Okay. The wick it's already given us on the 1 hour, the 30-minute. Okay. 15-minute was close to a bullish engulfing. It was close. If the only thing that I will want to make sure it does to feel, you know, good about it is, hey, are we going to at least break maybe this structure right here? Okay. Are we going to break this structure here? And are we going to break this structure here? As long as we break those structures, at least one, but preferably both, you know, as long as we break those structures, then that would tell me that it's trying to reverse, right? So maybe this would be a little bit of a front run, okay? The fact that we got in early, but, you know, because again, it hasn't really broken a structure, but it's a pretty strong looking demand zone, okay? So I think we could overpower it. Now, I'll be honest with you. We talked about this supply zone over here, right? The one that it broke through earlier. So the only reason I personally am giving this a pass is because it was a supply zone I had to chew through. If this move out of the demand, if this move would have gotten up here and just gotten lazy like this without a supply zone, then I probably would avoid it. So in other words, I would have preferred price to just keep on coming up a little higher like this, okay, before a return. And as you can see, it got lazier than that, right? Well, it had to have some power to chew through the supply zone. So it chewed through it. And that's why I'm okay with this. So hopefully I explained that okay to you. But yeah, nevertheless, we're in like Flynn. So we'll give her some time to let it do its thing. But yeah, again, that RSI divergence, okay, that RSI divergence looks pretty nice on that 15-minute time frame. Right? So there we go. We are in like Flynn. Let's see here. Yeah, the divergence looks a lot better like this. High or low? All right, we're going to let it do its thing, guys. So let's hop back over here. What else we got? So that was gold. Well, while we're over here, we might as well take a look at silver, right? Silver's giving us a bullish signal as well. All right, so silver, and I think silver. Oh, that's right. These two had a similar demand zones. Yeah. So the demand zone we bought gold from is there, and then obviously the one below. Remember, we had the similar setup on silver, right? Except over here on silver, it actually broke through the demand zone, but it had already hit and got a wick in and bounced up. So it looks like a 1.5 to 1, or maybe even closer to a 2 to 1. So, you know, if we would have gotten in here, which I was considering it yesterday, I was considering buying into this demand zone right here, but I wanted the gold, which is the one we just bought. I wanted it to be down at its demand zone as well, just as kind of like a confluence play. You know, it's just like when I get into let's just say a euro pair. It's nice to go over to the EXY, the European index, or the Dixie for the dollar, right? If you're buying a dollar pair, it's nice to see price even on those indexes drop into support, resistance, supply, demand zones, just as an additional confluence. So that was kind of my idea on this gold and silver play, and that's why I didn't buy into the silver play yesterday. And not only that, but it's, remember, like the gold, it is higher on the curve, right? It's not exactly at the cheapest. This is the cheapest point for silver. And then likewise for gold. Right? So anyway, hey, we're in. It's a small percentage. If it goes against us, we just latch onto another zone, right? I'm fine with that. Like, I don't mind. I mean, we all want to win every trade. But if we lose this trade, man, hey, look, we got another opportunity if it drops a little deeper at a cheaper discount. But you know, far too often, especially when I've got a strong bullish reading on the edge finder on my top setups, far too often, some of these higher demand zones are the ones that catch the bid and push price up. If I didn't have that reading, I would not be buying right now. But because I have the all right, back on here. All right, guys. Sorry about that. That's our daily hiccup, right? Our daily hiccup. All right, here we go. So, yeah, back to my notes. I was just talking about oil. Okay. I did write up the deal apparently yesterday with Venezuela. I guess the vice president of Venezuela, the newly installed one. Well, not newly installed, but the one that just took over after the capture of Maduro, right? So I didn't read if that was between her and the U.S. or what. But anyway, yeah, long story short, looks like we gained 30 to 50 million barrels of oil, which will probably, yeah, we're back, Alex. It seems like it happens at least once a day, right? The stream just drops. And I don't know why it does it. I really don't. But anyway, maybe one day the trading gods will shine down and allow us to get through a full stream. But anyway, oil. So it's been a little crazy lately, and understandably so. Okay. We had a spike up on the Sunday open on oil, but what did it bounce into? Bounced into the rest of this supply zone, right? So then we got a big drop. Okay, a Tuesday drop, and now we're down. Now we're down into this demand zone area over here. Okay. Which when I drew this up, I colored it light green because of, again, it did wick in right here on its way out. So I had to be careful about that. Now prices dropped into it. Been dilly-dallying around for a couple days. And now we're just trying to see if it's going to make a move. But I didn't really like this demand zone to begin with because of that wick. So that's why I haven't gotten into this oil trade. And not only that, I think it's still just giving us a regular neutral signal. So yeah, so it's not even on my list. In fact, let's just run over here. just looking at oil. Okay, oil is down somewhere down here. There we go. Yeah, see, it's a neutral -3. So there's absolutely no reason to be buying this thing from a fundamental and a sentiment perspective. It is lower on the curve, so it is a cheaper place to buy, but there's no direction to buy it from the fundamentals, right? And then, yeah, obviously not to mention, now there's a lot of speculators trading gold right now, and understandably so. Right? People that are news traders, right? Geopolitics traders that don't really dig as deep into the fundamentals. So anyway, I ignored that zone, but I kind of like the zone at the bottom. But again, did we have any volume down here? Doesn't look like it to me. So it just may be a wash totally. I think I drew this up the other day. If I get interested in oil, it would be because it's broken this high time frame downwards, like dynamic supply zone, and then we break this daily, like this green line represents, and then we come down and find a demand. So I don't think I've got any interest in trading gold for a while. It needs to establish itself. So we'll go ahead and ignore that. Top setups. So let's go back to my top setups real quick here, and we are going to next look at Aussie dollar and Kiwi dollar. Let's take a look at them because that's the one I was licking my chops a little bit from last night. Come on now. Share this tab. Okay. All right. So Aussie dollar, guys. Ooh, look at this. This is nice. This is nice, Alex. This is nice, Algo. I like this. What do we got on Aussie dollar? Okay, number one, we've got a +6 score. Okay, that's number one. So we've got the fundamentals and the sentiment slightly in our favor. I say slightly because 6 is bullish, 5 is bullish, but it's not like it's a 9, 10, 11, a super strong score. So it's just strong enough to where I'm excited about it. 4-hour time frame. Okay, this thing's just higher highs, higher lows. So I'm in line with the higher time frame trend on the daily. Okay, so that's good. There is a daily demand zone, but it's a lot deeper. So my play will have to be off of the 4-hour, or not. Well, 4-hour, yeah, because this would essentially be our 4-hour candle. Let's get that drawn up. Okay, that's our 4-hour candle. That doji candle right there, right? And then you see the volume, that candle right after, okay, had that spike up, which is the beginning of the New York session. So it's a pretty nice looking zone. Would have been nice if it were maybe 1 or 2 less candles right here, okay, if I really want to nitpick on this thing. But nevertheless, we broke all these structures on a pretty good volume candle coming out of that basing action, and it went up, went up quite a ways. Did that candle, I'm just curious, did that go 3 units up? So that's 25 pips is the range, and the distance is 77. All I needed was 75, so we're at a 3-to-1, okay? This is a trade that I think could pay us. So that's 4-hour. So where's my confluence? Drop down to a 1-hour. 4 divided by 4 is 1, right? And you guys see I got a 1-hour demand right here inside of the 4-hour. So that's why I put that white line where I put it. And that's going to be my potential entry. Assuming we get down here and look at a 5-minute time frame and get a little bit of a break of structure action going on. Okay, let's go down to a 5 minutes real quick. Okay, so once we get down into this area, it's game on. So let's take our projection tool. Okay, this is what I want to see now. It's got to jump through my hoops. Remember, we don't chase it, it chases us. So if it comes down into the zone, okay, get a bounce. Let's say we break this little bit of structure right here. Okay. Get that close up here. And then we get our final drop onto the 1-hour confluence. It's game on, boys and girls. That right there is exactly what I'd like to see. So if this happens, then it's because we're breaking structure with this candle, this upswing. And then again, we drop a little deeper into the demand zone in order to catch the 1-hour time frame. Okay. If we get that, it's on. It's on. And then we'll ride this thing up as much as it wants to give us. Okay. So that would definitely be my favorite play. Now, this hopefully will hit today. I think I put I put this on my shorts video yesterday, teasing about it, because this is probably going to be my number one item to watch today. Well, not watch. I've got an alert set, right? That's the beautiful thing about swing trading. We don't have to watch the charts all day. We don't have to. Okay. Set the alert and go about your business. Okay? Especially for, if you have a job or something, you can't be scalping. Right? Boss will fire you, right? So this is another reason why I love this. I can put the alert on and step away from the computer or go do work, right? I do work too. So it's just nice to be able to do that. And you guys see, I've got my alert set right there. So that's it. There's really nothing else to do on Aussie dollar except just sit and wait on that alert to hit. And again, we're not too far away. What are we, about 10, 15 pips, it looks like. So yeah, we're not far at all. Now, we're not far to the alert. So, okay, 17 pips. So about 17, 18 pips. Now, again, it's got to do this first. And it may not look exactly like this. It may take a little longer. It may go quicker. We never know, right? But drop into demand, get that initial lift, break a structure, get a return to price, because this is the manipulation. This is the expansion. This is master pattern 101, okay? Basing action, expansion legs, trend. And for me, all I want to see is that master pattern play out, which is basically a tradable way to look at Wyckoff theory, okay? Accumulation, distribution, trend, okay? And then put it on a chart, put it over a demand zone, or put it under a supply zone. That's the play. That's the play. This is what makes me, this is what, this is my edge. This is my edge. I mean, there's really nothing else to say about it. Base, expansion, trend. Just like that. And it's just beautiful when it happens in and around a demand or a supply zone. It's awesome. So that's Aussie dollar. Not really a whole lot more to add to that. We might as well take a look at its neighbor, the Kiwi. Now, the Kiwi is already in a demand zone. Okay, let's take a look at this thing. I got a lot of crap on here, don't I? Okay, so former demand zone over here. You can see it's actually been respecting it for quite a few times, right? I just left it up there and colored it black just so that I could see that that was a former demand. And it's now turned into what you would call a support, right? So starts off as a demand zone. Now it's a smaller time frame. I drew that up on. Okay. So started off as a smaller time frame demand, bounced in the demand once, then it bounced again, and it kept rejecting. So that turns into a pretty decent supply support. Okay. Now I don't think that makes it extra strong, because remember, this is where the retail traders are playing. So the retail traders had a victory or two in this area right here, not over here, because this is a bank play. But then, at that point, that negates the demand zone. That takes out those unfilled orders that are there. So then when you get these other bounces over here, right? And there's obviously some smaller time frame demand zones. That's what it is. So man, that thing's littered. Actually, there's a graveyard of demand zones there. That was actually a really good area. But I just like to leave those on there and just, color them black or color them light, just so that I can see how price reacts every time it gets back. And clearly, that's a pretty strong level right there at the 57.50 level. Okay. So anyway, we're back into the zone now on a 1 hour, 1 hour. Okay. So is there a play to make here? Well, I like the area. I just think that there's a lot of candles right here in this area. So that means there's a lot of time. That's a lot of time that, that the big banks and the whales and the institutions, that's a lot of time they had right here in this area to fill their order. And remember that was filled from this demand zone over here. So if I go to a smaller time frame, there's another zone in there that broke a structure. Okay, broke this structure here. Came back, hit the demand zone, had our lift off. Now we've broken another structure. In fact, we blew through this supply zone And we finally got to bounce off of this supply zone, and that's why price is coming back down. So this could be a potential play on Kiwi dollar as well. Let's go to a 15-minute time frame. Are we breaking any structures? Always the most important question. Okay, when price hits a zone, are we breaking structures to the opposite side? Okay, there's a, you could look at that as a structure to break. You could look at this as a structure to break. You could also look at this supply zone as a structure to break. Okay, now it's back outside of the demand zone. But is that not a zone? Was that not a basing action right here? Okay, basing action and then a big strong drop? Yeah. Always look for potential landmines. Always look for those landmines. All right, buddy, check. Who we got in here? Alex, you still in here? Algo? Just wanted to make sure that everything's still working on you guys' end over there. Let me know if you could drop a. Okay, you're good to go. Sweet. Just wanted to make sure. So yeah, I mean, I think, for me to be excited about buying this New Zealand dollar pair, I really need to start seeing some breaks of structures to the upside. Because if you think about it, it's already blown through. It's already went through the whole demand zone. Okay, we wicked out down here, did we not? So this is what'll keep you safe. Okay, if you're somebody that's wanting to start learning supply and demand zones or even structures, support resistance to a point, right? This will keep you safe. If you're going to buy something, make sure it's at least starting to break structures to the upside. But so far, it hasn't, right? And now this, if price were to drop, then this could become a new structure to break. But we're still within the range of this last structure point and then this current bottoming point, right? So there's no play yet. For me to be excited about buying this pair, if I draw my projection tool up here, I at minimum would have to see it break this first structure at minimum before a potential retracement to a new demand zone. Okay. I would prefer that it break both of those structures or overhead resistance lines, right? But extra kudos if it breaks through this supply zone right here and closes on the other side of it. If it could close like that, this would be a much better looking set of expansion legs on master pattern, right? And then obviously we get a retracement. Oops. Obviously we get a retracement with this leg here down to a brand new demand zone. And it will have to form something. So ideally, I'd like to see this exact move, meaning I want to see a big sharp push out, the initial burst. Okay. But it may not do anything, guys. Again, we've already went through the whole zone. So this is probably my last favorite on here. I'm just going to wait for that Aussie dollar play, me personally. Because I just think it looks a lot better. Go back to my 1 hour. And again, not to mention this area has been, touched a whole lot of times. I think the well could be running through on this if I had to put money on it. I'm not going to put money on a trade right here, right now, knowing that this was a lot. There were a lot of unfilled orders already taken. At some point, the banks are going to want to take it through the floor of that thing because there's liquidity on the other side. Okay, that's the cool thing about this. Okay, demand. Okay, touch point, touch point, touch point, touch point. Think about all the buyers that bought in here in these down moves. Where do you think their stop losses are at? Going back to ICT and all that, right? They're in this area. That's just the reality. Let's see. That's going to be their stop losses, which is their sell orders. Okay. In and around that general area, right? Everybody has a different idea of, the how far you put your stop loss away. But if it were to break through this zone, obviously we got those stop losses, which are sell orders, okay, which big banks need sell orders to fill their buy orders to ultimately take price up. Now, could we get a spring that just springs right through that and then bounces into this demand zone underneath? Hey, that's a potential play too. So spring through and then get a sharp reaction from collecting these unfilled orders from the demand zone, and then not to mention the stop losses, the sell orders to the upside. So that would probably be a play I'd be interested in on Kiwi dollar, but I think, again, I'm just going to spend most of my day, most of my brain power, okay, if the alert hits, on the Aussie dollar. So that is that. What else we got, boys and girls? Let's see here. Just looking at my setups over here. So the strongest bearish assets, the Swiss yen. Okay, let's go take a look at that, because, again, it's the strongest one, but are we anywhere near a supply zone? Let's take all my drawings off for a second on this thing. I got a couple alerts set up here. I just wanted to turn the drawings off for a second. Now, keep in mind, we are in a strong uptrend overall. This is a daily time frame. Is this not straight up? It is. But yet it's giving me the strongest bearish signal. So is this the beginning of a topping action? Okay. Am I going to see some breaks of structures to the downside? Well, that's what I would prefer. Now, it looks like we got one coming up. Okay, this daily demand right here. I think ultimately I would prefer to see the demand zone, this daily demand zone, break first. So essentially, if I get my tool, come down here and break through that demand before retracing to one of these supply zones you see up here, right? That would ultimately be the play I would want to play on this, but it's got some work to do. Because if I do anything up here too quick, I'm trying to fight that uptrend, because we haven't even broken any demand zones or any supports yet, or structures, right? So, but if I want to, if we want to front run a trade, well, we've definitely got some opportunities, but it could be a little bit on the, could be a little bit on the dangerous side up here. Let me go back to a 4-hour. I got way too many drawings here. Let's get rid of some of this. Yeah, that's it, guys. I mean, if you look at this thing on a 4-hour time frame, it is giving us lower lows and lower highs. So we could look into this zone here, because we do have a little bit of a 1-hour zone hiding in here. Okay, this little red candle here with a big drop. Went sideways though. So that is a potential play if somebody's desperate to trade something. But if you're desperate to trade something, the best thing to do is just to not trade. Just get up, take a walk, or go do something else. But yeah, I mean, it would not surprise me. I guess I could put it this way. It would not surprise me if this little zone hiding in here could be a potential reversal point. Okay. That could be a potential place for price to go down. We come up, we collect unfilled orders from that 1-hour and 4-hour confluence before dropping. That's a potential play. Okay. That's a potential play. I'm just a little leery about it because of the fact that the daily is just nothing but higher highs and higher lows. So that's, yeah. And this is kind of where it's a little frustrating with the Swiss yen, because it's just been really wicky on both sides of the candle bodies over the last couple of weeks on a daily time frame. We did finally get the breakout below, but again, is that just nothing more than a retracement? Okay, chasing higher time frame demand, which is where we're almost at. Oh, by the way, former resistance point over here going right through that daily demand zone. Yeah, extra leery about that technically. So again, just because I get a fundamental sentiment reason to short this thing, if it's not matching up with my chart, my technicals, it's no trade. Simple as that. And you guys know that I prefer the higher time frames. This is where my edge is. Yeah, I could get aggressive and drop down to some smaller time frames. Okay, look at this. I mean, we're even in a supply zone right here. Is this whole area here not a supply zone? Right? Is that what we're just bounced into right here? Actually, that was a perfect entry, I got to say. If you're looking at this thing on a smaller time frame, that's a perfect entry. Look at this supply zone. Okay, big, nice drop. Broke a structure as far as this structure back here, the early part of Asia session yesterday. Okay? And then retraced up. Now, the retracement up was a little bit hot. It came in, but it did finally bounce out. And how funny when it bounced into the supply zone, okay, kind of the second time, if you will. How funny is it that when it hit that downwards trend line I drew up a couple days ago, it's now getting a bounce from that. So confluences, this is where it's always good to, add in as many odds enhancers in your favor as possible. They produce nice trades like this. But yeah, that's so yeah, that I mean, but at this point, have we missed the trade? Yeah, obviously we have, because we would definitely want to be aware of at least underneath demand zone, possibly even this. Okay, that could be the underneath demand zone that we'd want to watch out for. Now, assuming the trajectory of all the candles and the higher highs, higher lows, all that, okay, I would expect that it would drop below that support. But again, we got that daily demand right below, right below. So yeah, at this point, it's a little dangerous. If you bought it up here, man, that was a perfect entry, potentially. All right, what we got over here? You're behind? What do you mean, Alex? What did you mean you're behind? Get my caffeine rolling. Let's see here. So we got euro yen and pound Aussie as well, guys. This is really the final two items. Final two. Oh, yeah. I've done that quite a bit. There's some people I follow that I'll get behind on every now and then. And then you go to answer something when you hear it, but it's not live for them, right? That's 10 minutes behind or 5 or something like that. So yeah, it happens. Let's go look at euro yen and then the pound Aussie, because this really is the final two that I have for you guys. We got 724. So let's go euro yen, pound Aussie. Okay. Euro yen. All right, what we got? Are we in a daily demand zone? It looks like it. Oh yeah, this is that one that we looked into a couple of days ago. So yeah, we're still in no man's land with this. Guys, remember, I think we talked about this on Monday or Tuesday. We dropped into this daily demand zone, and what have we done? We've just created a kind of a couple of doji candles so far on a daily time frame. So we've bounced into that. We've bounced into the weekly daily supply zone confluence. Okay, that's the orange box for the weekly and the yellow box for the daily. And now we've bounced into the daily demand zone. So this is just probably going to be, I could see this thing is going sideways for a while. Right? Just something like that. I mean, if I turn on my master pattern, let's turn off my drawings for a second. Turn on my master pattern indicator. Okay. When you get those orange boxes, that's obviously consolidation points. That's contraction points, contraction boxes. So the goal is obviously to wait until you get a breakout out of that box. And depending on the time frame you're looking at, you would essentially want to see, like, it's broken out to the bottom now, right? Well, then you'd want to see a break to the upside, because it's basically liquidity sweeping both sides of it. And then at some point you catch a trend and go where it wanted. So it started off like this, basically, right? It was this, well, oh, come on. Let me turn off my magnet, right? So that's basically it. You get your box, your sideways box, your contraction. And then what happens is at some point, at some point, the traders will push it out of the box. Well, when they do that, that's where a lot of times the banks like to manipulate price the other way, because you start getting short, people coming in and shorting this stuff. Get some of this crap out of the way. Okay. So you get the contraction. At some point, the price gets taken out of the box and closes. So that's where a lot of people sell the breakout in this case, right? A lot of people have sold in this area because it's exited that contraction. Okay. Well, this is the funny little trick that the banks like to do. So when that comes out, they see that. They know there's people piling into shorts, which means there's a lot of sell orders coming into the market. Is that right? They're selling. Retail traders are selling. So what do banks need to fill their buy orders? They need those sell orders. So they're selling right into the hands of the banks. And then the banks push price to the other side of the contraction, like this. Okay. Because when that happens, now you've got the bullish breakout traders loading up. What are they doing? They're buying. They're creating a lot of buy orders into the market. What do the banks need to push price? The opposite way. They need buy orders to fill their sell orders. And then the process just repeats. And sometimes it's quick, And sometimes you just get all kinds of contraction legs, but each time you're having higher highs on the upside and lower lows on the bottom side. It's often called the megaphone pattern. We talked about this, me and Richard, off quite a bit. Okay, some of the other coaches, the megaphone pattern, the widening out as price goes along. Okay, so that's just that's the way the banks manipulate, man. It's the way they do it. It's one of the ways. Okay, they got all kinds of tools, but that's one of the ways, because they have to have liquidity. They can't get into an order and then it just automatically allow all their order to get in. They have to layer it in or trick the system. Well, this is one of their ways of doing it. And I don't even think that's, man. Yeah, I've searched. There's really not a whole lot of anybody that even teaches that. But yeah, I learned this from a mentor of mine, and as I applied it to my supply and demand trading, and started taking off, boys and girls. And all that is market structure, Wyckoff theory, accumulation, distribution, trend phase. That's what it is. Okay. So anyway, yeah, because of the fact that we are in that zone, those zones, I'm just really not too interested in it at this time. It's just too fishy. So I'll just wait. I'm going to wait for it to do something, either break through the upside of these overhead supply zones or break through the bottom and start getting me some lower lows. Okay. So I need to at least break a structure like maybe here. Okay. Let's break that. Let's get my magnet tool back on. Break that structure like that. Okay. And then get a retracement up to supply. So I would do something like this. Okay. Now, a little bit more aggressive would be to just break through the bottom of the supply zone, the daily supply. But yeah, I think ultimately I just want to see this break a structure. So yeah, there's no play on this thing at this time. I think we're pretty well at the end of it. Last one, guys, I have for you is pound Aussie. So let's go over here to pound Aussie. Okay, so at least we're getting the downward structure on some higher time frames. Now, that's the overall higher time frame. But if we go into the last, what do you call it? 2.5 months, 2 months. Is this not just the overall sideways move? Okay. Take a look at this thing. Weekly time frame. Okay. We're on a weekly time frame. Is this nothing more than a big sideways contraction? Looks like it to me. Right. So ultimately, same thing. Would like it to do something, because that's just too choppy, for the higher time frame traders. Break out of the bottom of this thing. Okay, that'd be goal number one for me. Let's turn that off. All right, getting back to the 4-hour time frame. So we got our supply zone overhead over here. Now we've bounced into we've bounced into a demand zone, but has it already been touched? It has. So that's why it's colored light green. It's already really made the strong move off that zone. So do I really want to worry too awful much about it affecting my trade? Maybe, maybe not. I mean, it also did bounce into that blue dash line, guys. That means former support or resistance line. Okay. Well, clearly, because you can see it right here. Okay. So it's definitely an area to be aware of. At this point, though, if we're drilling down into the 4-hour, okay, you can look at this thing as a swing high and obviously the swing low. So if you're looking at the smaller time frames, then this would be high on the curve. So it would, meet the definition of selling it. The selling into premium, selling at the higher prices. So we got a 4-hour supply. If we look at this on a 1-hour, now it is a little bit fishy. Okay, that's our candle here. It would have been nice if it was green, but it does have a gap, but it's not that strong. So let's go to a smaller time frame, because it looks like I drew something up here. It's probably a 15-minute. Yeah, there we go. There's our 15-minute supply. So we got a 15 confluence in a 4-hour. We technically have a 1-hour too, but it's not my favorite. Probably going to skip this as well, guys. I mean, I've got an alert set there. I do want to see what happens. Hey, when we get in there, is it going to give me any kind of bearish engulfing candle with a wick on the top? We're going to get a volume spike, but it all looks very not so good, just because we've gotten deeper into this demand zone and we hit that former support. Okay, that blue dash line. So probably going to ignore this one as well. As always, guys, I talk, I tear these zones apart. I tear them the hell apart. Okay. And I do that on purpose. I do it on purpose because, goal number one in trading obviously is capital conservation, making sure you're not losing money. That's obviously the goal. Everybody wants to make $1 million, but the first thing out of our mouth should be protecting our money. So how do I protect my money? I disqualify as many potential trades as possible until I'm only left with something that's meeting all my rules, meeting all my expectations. So yeah, this might do it in for me to where I'm not interested. So I'm really just left with, just to kind of put a button on the day, really just kind of left with the Aussie dollar. Okay. This looks like a super nice potential entry to me. Okay. 1 hour demand inside of a 4 hour demand. Got our confluence. Now, and I might even get away with, I'll be honest with you. If this thing comes in and touches the 1 hour and I just get that bullish engulfing candle right away on a 5 or a 10 or 15, or that big wick underneath, okay, along with a volume spike, if I get that, I'm probably going to be okay with not having to wait for it to break a structure because it is low on the curve in this particular region, this last week and a half or so. Right? But extra confirmation will be what I drew up already. Okay. Extra confirmation, meaning get that bounce in and then break this structure before pulling back and ultimately hitting the 1 hour and then lifting off, right? So we'll see how that works out. Guys, I'm going to get out of here shortly. Do you have any other goodies for me to look at, or any questions about any of these fundamental reports or the big banks? Okay, where they're positioned on anything? Let me know. I could definitely. You got a little bit of time. I might, because yeah, I've already pretty much reached the end here. Euro pound. Oh yeah, let's look at euro pound. Good play. Good job. Yeah, you did mention that yesterday. Let's go take a look over here. As always, start from the daily. The daily is giving us a downtrend. We have bounced into a daily demand zone. We are getting a push up from it. Overhead, we do have the daily supply. Okay, so let's go to a 4 hour. Okay, so it looks like we did. Yeah, we talked about this because we drew up that zone there. Now it chewed through that zone. What time frame was that? 2 hour. Yeah, 2 hour supply. I expected it to blow through that. Okay, because it's so low on the curve, and we hit that higher time frame demand zone. Right? Do I think it's sustainable to the downside? Well, first of all, I'm going to go off screen here just to see what score I'm getting. I know it's a neutral score, so I know I don't have a fundamental or sentiment, a strong reason to buy or sell it, but let's double check over here. Euro pound is a neutral +1 score. So I'm getting negative readings on the technicals, a couple negative points on the sentiment, but it's getting 6 points on the positive side for the economics of it, the fundamentals. So if somebody out there is just strictly a fundamental trader, they don't worry about the technicals. They don't worry about what the big banks think. Okay? If somebody's strictly fundamental, they're buying this right now. If somebody's strictly technical, well, they're following that downtrend. And then obviously when it comes to the sentiment, it looks like it's slightly favoring the bearish side of things. So you got a lot of mixed signals, right? You got very bullish fundamentals. You've got slightly bearish sentiment analysis, and then you've got a little bit slightly more bearish technicals. So 2 of those 3 are bearish, but 1 of those 3 are very strongly bullish. So you see how that gives a little bit of a conflicting signal, right? So that's why it shows up as neutral on my chart, because this thing could go either way. I mean, sometimes if I've got a neutral score and I feel really strongly about the technical setup, I'll go ahead and take it. I'm just going to be putting on lighter risk. Definitely not going to be risking a full risk on that. So currently, I would say, higher time frame, we're uptrend. If we just zoom into this most recent leg, okay, we're obviously into a downtrend, but we have bounced into the demand. It has bounced up, which could be nothing more than a retracement from this down leg, right? Some profit taking. Okay. I guarantee you there were some profit takers in and around this zone. Okay. So that's people buying the market to cover their shorts. So now we come back up. If we continue this, then yeah, we're right there at some supply zones. Yeah, and on this particular one, okay, our daily zone didn't have a good looking 4-hour supply. There wasn't really a, you guys see everything's already kind of overlapping the candles to the left and the right. So I didn't see a 4-hour candle. Did I have a 2-hour? Okay, well, let's, ladies and gents, let's look at this. Let's draw this box up. Watch this, 2-hour time frame. All right, look at that. Is that a 2-hour supply? Let's go zoom into that for a second. It does have a gap. By definition, is this not now it's a small gap. Is that not the tiniest gap you ever saw? Okay. By definition, that's a gap. So you could potentially drill even deeper into the 2-hour. So once you do these confluences, by the way, especially when your lower time frame zone is a little, in this case, higher up in the supply. Well, now you don't have to even worry about the whole bottom part. Okay. The underside of the daily. Does that make sense? Because all we care about is that 2-hour supply zone, that 2-hour range. All right. Well, let's go down to a 1-hour. Got anything in the 1-hour? Does the 1-hour produce a gap inside of that zone? No, it doesn't. Okay. Looks to me like all these candles are overlapping each other. That looks like a really nice 1-hour candle. Problem is it touched it already right here. All right. It touched it. So it's old. It's old news. It's mitigated. Can't use it. You drop down to a 30. We get a picture on the 30. Remember, all I really need is I prefer to have at least 2 confluences outside of the higher time frame zone. But if I could get 3, if I could get 4, that makes it even better because that just tells me there's more sets of eyes, multiple sets of eyes on that spot. So, yeah, 30 minutes, not really a whole lot of anything. These are all overlapping as well. I'm going to end it at the 15-minute, though. I don't really want to go any deeper than that. I mean, if you look at this thing on a 15, okay, then you could even look at this little spot right here. There's a gap from there to there, okay? There's our gap in between those white lines. There, you could look at this as a zone, but the problem is it's already touched. Okay? This candle already touched, did it not? It wicked in. So because of that, that zone is no longer in play. But this candle is because we have the gap here. Right? This is our gap. This is our fair value. Okay, there's our fair value and there's our gap. So fair value, aka supply zone, aka unfilled orders, potential spot to jump in. Right? So I'm going to delete this bottom line here. And yeah, that's a potential play, I guess. I guess you could say on the euro dollar, but it's got some work to do. It's still a ways away, right? We're still way down here. We might as well delete this supply zone because it's no good. Okay, what else have we got? We do have this supply zone here. Yeah, I mean, you got a supply here. I mean, you could potentially take a small stab at this area here because we had a gap there, and looks like we got a white line. So if we go down to some smaller time frames, we got some confluence as well. Okay. Okay, so I'm gonna go ahead actually and set an alarm there. I thought I had an alert there, but I guess I don't. So let's get an alert set on this price point for euro pound for you. Is that making any sense? Did I do a lot of rambling there? I set an alert up for you because I want to see if we got if we hit this by tomorrow or Monday or whatever the case is. But I mean, yeah, if you come up to this area, it would probably be. Oh, that's one other thing I wanted to do. So in order for me to even justify getting into this supply zone to the upside. Oh yeah, you're going to the upside. Yeah. If you break this supply zone, Alex, and especially if you break these supply zones, I would want a retracement back down. Because if you buy right now, what are you doing? You're catching a falling knife, right? Lower lows, lower highs, lower lows, lower highs. Yes, you have hit the demand. I personally wouldn't want to put money on it. until I see it break a structure to the upside first. I guess to sum it all up for you. You took the long. Okay. Well, no, look, it's at the end of the day, it's a good looking zone. Again, I'm just so picky. I'm picky. Now, look, we talked. Oh, yeah, we did talk about this spot here, guys. Alex, I think we talked about this spot here. So we've broken the structure now, have we not? So this makes your long look a lot better. Okay. What price point did you get in, by the way, if you don't mind me asking? Yeah. Oh, yeah. Yeah, that's right. You want to know all the roadblocks. Yeah, exactly. Well, this is your first roadblock right here. If you're long, okay, it's going to be that zone. So if you get price coming up in your favor, which it looks like it is, depending on where you bought in at, 86.59. Oh, okay, yeah. Yeah, that's great, man. That's beautiful. Look, that's beautiful. Your trade to me looks a lot better now because you broke this structure, which also is a supply zone. That's why I drew this supply zone. Okay, that is by definition a supply zone, but you've broken through it, which means you've also broken through that smaller time frame structure, right? So that's looking good. Now here's the thing, and I've got an alert set up there. If price starts getting up into here, if I were you, and I think I might have mentioned this yesterday, I would at least start trailing your stop up here somewhere, just to lock in those unrealized gains somewhere in this area. But the way to do that is, if we go to a smaller time frame, let's go to a 15. Okay, let's pull my tool back over here, and I'm going to take this off. So what I would do is at least because where you're at now. Okay, you bought down here, obviously, 86.59. If nothing else, bring your stop loss to break even if you haven't done so already. Okay, and then you could look at this little swing low, this little wick, as a potential spot to move your stop loss to. You've done that before, perfect. So yeah, it's just nothing more than, if you were to go to a 5 minutes, I mean, it really depends on how aggressive you want to be, right? So if you've got your stop loss down here somewhere, obviously, as this spot here breaks like it did here, it broke this structure. Okay. Then when price comes back and breaks that structure, that's where you'd want to move your stop loss here. Okay. So always look at the impulse legs. What's an impulse leg? Well, it's a leg that starts and breaks through a structure. So this right here would constitute as an impulse leg. Why? Because it broke this structure. So when that impulse leg gets taken out to the upside, like that, that's where you want to make sure your stop loss is moved at least to there. Now, let's say, okay, and that's where structure was broken. So now we automatically look at this little leg right here, That's an impulse leg. Why? Because it broke a structure. Well, you'd want to put a line up here like this, and now you'd want to move your stop loss under the bottom of that impulse leg. Now watch this. We've broken structure again, right? Same thing applies. This leg right here broke this structure. So you would want to take and put your line up here, and then now move your stop loss under there. Okay. That's the play I would do, because all you're doing is just putting your stop loss, your trailing stop loss, manually moving it underneath each impulse leg, right? So if it were me, I'd be having my stop loss right exactly where I put it, 86.80. It looks like. Okay, we're looking at this on a 5 minute time frame. Well, because now you got this impulse leg. Now prices come back, and it's actually probably hit a little bit of a demand down here, and as you can see, it's bouncing up. So I would expect, just keep this circus going. I mean, at some point, hopefully you break your structure here. Let's just say you're up here, right? If you break this structure, then that's where you can even take your stop loss and move it under this. Now, it's not going to move as much this time, but it's still moving up slightly, slightly higher than this point. So you're in a good spot, man. And even to lock in a little more, because this zone here, this price here broke into this zone here. If you get this spot to break, if you wanted to be extra conservative, you could move it up after you break that structure right there. You could move it to here, right? Or if you just want to wait for the main one, then you would just do that. So there's a couple of different ways of handling that, but yeah, looks like you've looks like you've got at least 20 pips so far. I'm counting that right. Now, euro pound is a slower moving currency pair too. So that's a great trade on that particular pair. Euro pound only move. No, that's great, man. Oh, that's awesome. Good stuff. Good stuff. Good stuff. Yeah. So did I kind of explain the trailing stop loss okay for you? So let me make sure. I just want to make sure I did that. Yeah, that's the whole goal, guys. I mean, it's one thing to get a big profit on unrealized gains, meaning your trade is still open. It's another thing to close it with those profits, or at least the big chunk of it. Yeah, that's great. That's awesome. That's awesome. Awesome. I like it, man. Technical so that's good for, so keep in mind, that's good for the technical side of the analysis, right? Hopefully as you go along in your trading journey, that's where you want to start understanding the fundamental and the sentiment, because that's really where the money's made. And that's why I personally didn't trade it, because it just wasn't meeting my criteria there. But from a technical perspective, got it. Yeah. Okay, good. Yeah. Man, I think everything rises and falls on supply and demand, that relation. That's really it. I mean, you hear it in the news, when you watch CNBC or whatever financial news station or whatever. They talk about supply and demand, but this is just a cool way to map it out so it's visual. Too impatient on entries, but it's work in progress. Hey, yeah, you got to start somewhere. We all are. Hey, I made a shorts video the other day. What day did I do that? A couple of days ago, I think 3 days ago. No, 2 days ago, I made a shorts video. And I mentioned being like a baby scorpion in there, not being able to control my stinger, right? Meaning I was buying and selling every single supply and demand zone I came across. And wondered why I was losing, because I was taught supply and demand zones work. Why is it not working for me? Well, it's because I was just not, I was taking everything. Not every supply and demand zone works. There's a lot of context that you got to, see it through the prism, see through the prism of the context of all the variables, all the odds enhancers. And all trading really is just lining up as many odds enhancers in your favor. Okay, the odds enhancers for the fundamental and sentiment analysis, as far as odds enhancers, right? It's all the readings, the COT report, the inflation reporting, right? The PMIs, the NFPs, the unemployments, the JOLTs, the ADPs, right? These are all nothing but odds enhancers, each individual box. Okay, sentiment analysis, fundamental analysis, technical analysis. Okay, that's the three main. That's where it starts. Okay, those are the groupings, but then every single item is a odds enhancer. So if my odds enhancers, if I'm getting as many odds enhancers in my favor, okay, that's my direction. That's my direction and reason to go buy. But odds enhancers on the technical side of thing, okay, my odds enhancers are the RSI, okay, divergences, my volume spread analysis, trading activity in that particular candle, right? A VWAP now and then, okay? A bounce off of a 61.8 or a 50% fib retracement. That's an odds enhancer. Higher highs and higher lows if I'm buying, right? Odds enhancer. Strong demand zone, okay? Meaning it has a gap after the formation of it. That's an odds enhancer. Breaks of structure, okay? That zone breaks structures. That's an odds enhancer. So all trading is just lining up as many odds enhancers in all three of those analysis groups as possible. That's all it is. When you've lined up those odds enhancers, you've done your job. There's nothing more you can do. You place the order and you're done. Okay. And over time, and yeah, nothing works perfect. There is no such thing as a trading strategy that works all the time. But all it needs to work is maybe 1 out of 3 with good risk management. If you can figure out how to make it work 1 time out of 3 times, it's just like baseball, right? Hall of Fame baseball players, all they got to do is average 300, right? A 300 batting average, which means they're failing. You guys know how this works. They're failing 7 times out of 10. Doesn't sound good, but it's a Hall of Fame career. So just to kind of parallel that with trading, A Hall of Fame career means all you got to do is average 300. Okay. Or in this case, win 1 out of 3. So 333, we'll call it, right? It's a pretty good Hall of Fame career in baseball. But the same can be done in trading with proper capital conservation techniques, proper risk management. And that's all it is. Lose a little bit and lose a little bit often. But when you get the winners, let them run, let them keep going, which is, in your case, is trailing your stops. Okay? You don't want to choke it too tight because you want to give it some wiggle room. I mean, that just to kind of sum up before I end the stream here, that was really my idea with this NASDAQ trade. I think you might have been, one of you was asking about my NASDAQ trade the other day. Let me pull that up one final time and I'll end it on this. Share this tab instead. Oh, we got to get the chart up there. All right, give me 1 second. I'll get this chart back up. Yeah, there we go. Okay. Yeah, and just to finish up, guys. Okay, I'll just finish up with this. We talked about this supply zone that I had to fight, right? So when I bought this zone, okay, again, a lot of people will just sell. A lot of supply and demand traders will just sell right below the supply zone, which is safe and it's understandable. And that's the way we were all taught as supply and demand zone traders. But again, why cut myself short when I can give my stop loss a little bit more wiggle room? Yeah, it'll come back and take me out and take some of those additional unrealized gains. But over the long haul, okay, again, going back to the win 3 times out of 10, right? Over the long haul, those runners will make up for it. So price comes in, comes down. Remember, I ended up closing out up here in the middle of that supply zone. Okay, see that red candle? That was my exit. So I didn't steal. I basically took out another $100 on NASDAQ, okay? About another $100, give or take. So if I would have just closed right here, which is what I used to do, well, then I'd have missed out on those additional gains. Now, again, even though I caught another $100 on this thing, $100 meaning, it's a $25,500 instrument, right? Even though I still took half of that supply zone worth of profit. Look, I should still be in this trade, shouldn't I? But I just didn't want to give away any more gains than that because for all I know, it could have busted through this newly formed demand zone, kept going. But it hit that demand zone and guess what? It took off. Okay. So I exited the market, even though I made a pretty good money on that. I exited the market where somebody else picked up my shares and they're making their own set of money. So we're both winning here, right? So anyway, yeah, that's all. I mean, again, trading is just nothing more than cutting your losses quickly and letting your runners run. If you don't remember anything else from today's show, cut your losses quick, let your runners run. Before you go, you got a good resource for Wyckoff theory? I do. Yeah, I do. Let me see here, guys. I'm going to look off screen over here for something real quick, and then we'll get up out of here. I actually kind of created a market structure video. So I think I could probably just share that with you guys. Let me see here. Tell you what, send me an email. Let me see here, guys. Alex, are you on? Well, I tell you what, I will post the video on the YouTube post as soon as I end this video. Is that fair? I just have to look it up, and it's one that I created. So, but yeah, it talks about market structure. It talks about Wyckoff theory. It talks about accumulation, distribution, and trend. Okay, how the market structure really works. So I'll find that link and I'll just make it as a post on a YouTube post. So yeah, I'll send that. Let me know what you think on there. And if you have any further thoughts or questions on that video, let me know. I mean, I've got some pretty good videos I created on supply and demand, technical, fundamental, sentiment analysis. So I'll get some of those lined up for you. But yeah, I'll send the first one. And with that, ladies and gents, it's time for me to get up out of here. All righty. Yeah, I'll share it. I'll definitely get that shared. I just got to look it up. So, all right, boss. All right, guys. Cheers. Aussie dollar. That's it for me, guys. That's the main play I'm going to be watching the rest of the day. All right. So I'll let you guys know tomorrow on Friday how that goes. So with that, have a good one. We'll talk to you soon. Let's see here.